Alright, it is Sunday, May 17th, 2026, and I'm going to provide a BX market weather report. I'll be going through and showing how I view the market with my BX indicators. And to start off here, we have the chart of SPY, the S&P 500 ETF. And this is a daily chart, and the viewing window is year to date. And I'd like to explain what indicators I have on here. I have some exponential moving averages. You can see this yellow line, dotted line here, this light blue line, and the dark blue line, and the purple line. Those are the exponential moving averages that I use. And so they are the 5, the 21, the 89, and the 377. And I use those because they are Fibonacci numbers. Here's the first few Fibonacci numbers: 1, 2, 3, 5, 8, 13. You get the next one. 1 plus 2 is 3. 2 plus 3 is 5. 3 plus 5 is 8, and so on. That's how you get the Fibonacci numbers. And the reason why I like to use Fibonacci numbers for the exponential moving averages is because from one number to the next, the ratio is preserved. The ratio between Fibonacci numbers is the golden ratio, 1.618. So if you take, like say you start here with 5, and you want to get the next one, if you multiply by 1.618, you get 8, approximately. And then same thing would happen if you go 8 times 1.618. You get about 13, and so on. So the ratio from one Fibonacci number to the next is about the same. It's about 1.618. And so that's why I like to use those. And I don't want to have all of these exponential moving averages on my chart, although sometimes I do look at it like that. For my standard view, so I start with the 1, that's basically the price, and skip 2. So if I skip the 2 and I skip the 3, and so I use the 5, I skip the 8, I skip the 13, and I skip the 34 and the 55, and I skip the 144 and the 233. And so these are the exponential moving averages that I use. So I have the price, I have the 5 EMA, the 21 EMA, the 89 EMA, and the 377 EMA. And so notice I was skipping 2 numbers each time. So basically to get from 5, to get from 5 to 8, you multiply by 1.618. To get from 8 to 13, you multiply by 1.618. And then to get from 13 to 21, you multiply by 1.618. So we're multiplying 1.618 times 1.618 times 1.618. So 3 times. So the ratio between these numbers is about 4.236. So we go 5 times 4.236. You get 21. And if you go 21 times 4.236, you get 89. And if you do 89 times 4.236, you get 377. So preserving the ratio, keep these kind of spaced evenly, so that's why I use those particular exponential moving averages. And then finally, let me explain these indicators down here. I have 3 indicators: the BX fast, the BX mid, and the BX slow. And those are momentum oscillator indicators. The BX fast, it measures the short-term momentum. The BX mid measures the mid-term momentum, and the BX slow measures the slow-term momentum. And the definitions of those indicators is here. For the short-term momentum, the BX fast, you're doing an RSI with a five period look back, and you're taking the RSI of not the price, but the difference between the 5 EMA and the 21 EMA. So RSI basically measures up moves and down moves of a variable. The variable that we're measuring is the 5 EMA minus the 21 EMA. We're looking for upward or downward movements over the last 5 days. And that outputs a number between 0 and 100. So if it's having upward momentum, the number will be closer to 100. And if it's having downward momentum, the number will be closer to 0. And then at the end, I subtract 50 because instead of going from 0 to 100, I want to go from negative 50 to 50. So that way in the middle will be 0, which is where it's kind of like at equilibrium as far as the momentum goes. So that's what my BX fast indicator is. And so it turns green when it's above 0, and it turns red when it's below 0. And the BX mid is similar, except it's a 21-day look back, and you're looking at the difference between the 21 EMA and the 89 EMA. And then the BX slow is an 89 period look back, and you're measuring the difference between the 89 and the 377. So that's the details of what these indicators are. So if we look at it, if we look at this now, so the BX slow, so it had been building from red at negative 20, then it started rising, negative 19, negative 18, until here recently it has turned green. And so it's above 0. It's currently at 2.68. And the mid has been building over the last several days, and the fast has been green for a while, and then it's just turned red on Friday. So we could look at this chart with these indicators, and we can basically see like multiple time frames on one chart, and we're just looking at a year-to-date chart. The BX slow is kind of like taking a peek at the monthly chart. The BX mid is kind of like taking a peek at the weekly chart, and the BX fast is kind of in line with the daily chart. So we have short-term momentum fading on the S&P 500. We have midterm momentum building, and long-term momentum also building. We can see that all at one glance by looking at this chart. Okay, so now that I've kind of explained my setup, I'm going to go through and show what do I look at to see how the market is doing. So I always start with the S&P 500, that's the benchmark. Then the next thing is the RSP, which is the equal weighted S&P 500. And so that's counting all 500 stocks equally. And you can see it's not quite as strong, so if we kind of go back and forth, there's the SPY. It just fell below the 5 EMA. There's a lot of room down to the 21 EMA. If we look at the RSP, it is below the 21 EMA. So structurally, they're different. The RSP is weaker than SPY. So that kind of tells you a little bit about market breadth, that not as many stocks are participating in this uptrend, that it's being dominated by the larger weighted stocks that are the large caps. So we can see with the equal weighted, short-term momentum has been fading, mid-term momentum is starting to fade, and long-term momentum is starting to fade. Next, I'll look at the NASDAQ composite. Looks very similar to the S&P 500. Short-term momentum is starting to fade, but mid-term and long-term are still building. Next is the NASDAQ 100. Very similar. And the NASDAQ 100 equal weighted. Also very similar. Just a little bit weaker than, so the equal weighted QQQ is just a little bit weaker than the Qs. Not a lot weaker like we saw with the contrast between SPY and RSP. And next is the Dow Jones Industrial Average. So not quite as strong as the NASDAQ and the SPY, but not below. It's still above the 21 EMA. Midterm momentum may be starting to fade, something to keep an eye on. Next is the S&P 400 mid-cap ETF. It is below the 21 EMA, so this is starting to show signs of weakness. Short-term momentum is fading. Mid-term momentum is starting to fade, but the long-term momentum is still good. So definitely something to keep an eye on is the mid-caps. The small-cap Russell 2000 Index, IWM, very similar. It closed right at the 21 EMA on Friday. So short-term momentum is fading. Midterm momentum is possibly beginning to fade, but the long-term momentum is still strong. So those are the major indexes that I keep an eye on each day to see how the market is doing. Something else that I look at is this FFTY. This is the IBD 50 ETF. These are like your leading growth stocks are in this portfolio. I think it's updated weekly or maybe even more, I'm not sure. But it tries to keep track of what are the leading growth stocks. And so growth stocks this is still above the 21 EMA. Short-term momentum starting to fade. Mid-term and long-term momentum are still rising. And then next is the volatility index, the VIX, VIX. This gives an idea of what the volatility is in the market by measuring something using the options market on the S&P 500. And what you want to see is this low under 20. Currently the value is at 18.43. And we can look at the BX indicators on this VIX. We can see the BX mid did flip from dark red to light red, which means that midterm momentum is possibly starting to rise. We want to see this when it's in the dark red. This is better for trading. Okay, so those are the main indexes that I keep track of each day, and then I also like to take a look at the 11 spider sector ETFs. And let's start from the bottom here with XLK. This is the technology sector. It looks very similar to how SPY and QQQ. Notice the fast momentum is still green. It didn't turn red like the SPY and the QQQ. So this is even stronger. It closed right at the 5 EMA instead of decisively below the 5 EMA. So technology sector looking very strong. And as we're going to see, it's the only one that looks really strong. If we go to the real estate sector, XLRE, and I've color-coded these. I didn't mention it on the other slide, but color-coded these according to their BX slow indicator. So XLRE, long-term momentum is still looking good, but the midterm and short-term are fading, and it's closed well below the 21 EMA. Next is the energy sector, XLE. You can see the long-term momentum has been strong all year, and midterm momentum is trying to pick back up, and so this is one to keep an eye on. It's been very volatile lately because it's tied directly to the price of oil. Next is the consumer staples, XLP, and the midterm momentum did turn green this past week. The long-term momentum is starting to turn back from dark green to bright green. So this is one to keep an eye on as well. It's usually thought of as a defensive sector. This could be a signal. So we'll see if this starts to take off or not. Then next is the utility sector, XLU. I've colored this blue because I don't have a dark green. The BX slow is dark green, fading momentum in every time frame. XLI, the industrial sector. The long-term momentum was starting to build back again. So this is kind of at an equilibrium here with the mid. It's trying to decide what it wants to do. It did break the 21 EMA on Friday, so kind of watching this one to see which direction it decides it's going to go. The material sector, XLB, kind of similar to industrials. Like it's trying to decide if it's going to go back to the mid turning green or if it's going to get more red. And this candle here on Friday seems to indicate it wants to go down. Next is the financial sector, XLF. You can see the long-term momentum is in the deep red. Midterm momentum was trying to gain some steam in here in late April, early May, and then now it's starting to fade. Next, XLC, the communications sector. Long-term momentum is red. Midterm has been trying to pick up, but hasn't been able to. Kind of flipping back and forth between gaining momentum and losing momentum, or fading. And then next is XLV, the healthcare sector. Long-term momentum has just recently shifted to red, but midterm momentum is trying to build. So I'll be watching this one to see which one is going to win out here. And finally, the discretionary sector, XLY. The long-term momentum was starting to increase, but then on Friday we get our first dark red, and it did break below the 21 EMA. So we'll be watching this to see if that's going to continue fading or not. So those are the 11 sector ETF, and so we've got these color-coded according to the BX Slow. The only one that looked really great was the technology sector, XLK. That's leading this recent market rally, and the others that are green are real estate, energy, and staples, with staples just coming into the green. And there's some other things that I like to look at as well that are like I like to look at the gold ETF. So here's that GLD. The momentum is fading in all time frames. Very bad candle on Friday. I also like to look at silver. It moves somewhat similarly to gold, but not always step by step. But it also had a bad day on Friday, and notice it turned green on the mid on Thursday, and then on Friday it was down about 9%. And I also like to look at Bitcoin. Long-term momentum is still trying to build back to the green, but midterm momentum is starting to fade over the last few days. Okay, so those. And so one more thing that's noteworthy is the 10-year Treasury yield. This is part of what was driving the weakness that we're seeing on Friday. On Friday, this is the TNX ticker. The yield went from 4.46 at the close on Thursday to 4.59 at the close on Friday. So it's kind of a big spike up for one day on the 10-year Treasury yield, and I believe that's what markets were reacting to on Friday. We were seeing a lot of down candles. So that's my overview for those are the things that I look at when I look at the market each day to see how the market is doing.